Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil, and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I'm going to kick off with the S&P 500. And it's been, look, this remains a story of consolidation in the S&P 500. Price action has been fairly muted over the last week. Not a great deal going on. We've got this gradual pullback from the highs earlier in the week, but overall, it's been a fairly lackluster market over the last week. I think the concern for many investors is that the bullish trend is over, and then this is start of a large decline. That's always possible. No one can rule that out. No one can rule out anything in these markets. But I think at this stage, this appears to be more of a consolidation or a correction of the 28% rally we had off the October lows. That, to me, seems to be the most likely scenario at this point. And so far, you look at the pullback so far, this is a 6% decline from the highs. And in an average year, the S&P 500 will have around 5% pullbacks. So when you look at it from that perspective, what we're seeing at the moment, it's really not remarkable in any way whatsoever. It's very much part and parcel with what we see in price action of stock markets. They rally and then they have pullbacks. It's encouraging, I think, that we're seeing some buying emerging off the 100-day moving average. So I've got the 50-day and the 100-day moving averages on the chart. But I think this is going to take longer to play out. I think it needs more time. The rally off the October low, so you look at the October low rally, the time that took, that was a 5-month advance. So far, we've had a pullback that's only lasted 1 month. So I think from a time perspective, that's just not long enough to correct a 5-month rally. And so from that perspective, I think it's more of a case of sideways price action. The market does continue to move in a general sideways motion. Same applies when we look at the Dow. If we just jump over to the Dow and have a look what's going on with that. Similar sort of story in that it's also finding buying interest coming in around the 100-day moving average. And what's interesting with the Dow is it's coiling. You can see this coiling pattern that's developed over the last 3 weeks. And one of the possibilities is that it breaks to the top side of this range and then rallies back up towards the previous highs. And then from there, maybe that could be the start of a larger trading range. And then if we get a rally from current levels, we could end up with this larger range that then persists for several months. That's just one scenario. Or another is that we get a rally and then we get a zigzag decline. We get a light decline back below the April low. So there's all sorts of ways that this could map out. And that's the thing with these consolidations. They're often messy. They're hard to navigate. I think the best course of action during these periods is to be patient with buying. Really, I think when we're in this phase, there's no rush to go out and add to positions to try and buy the low. Let the price action sort itself out. Let the price action stabilize, and then look for the setups that develop from that. My aim here is to see off what could be a moderate or maybe just a modest pullback. At the moment, this is really, look, you'd probably call this a modest pullback, 5-6%. It's not a big deal. So my aim with my portfolio is to see off the pullback, stay with my best stocks, see if the upward trend then re-engages as we go into the year. I'm going to come back and have a look at the small caps in a moment. But first of all, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching, you're engaging. and that tells YouTube to go and sends it the message to show other people, and that helps me a lot. So please do those things. Now let's round this out with a quick look at the small caps. And there's been some interest in buying the dip through the week, and from last week's low for that matter. There has been some interest in buying this market, but really there's no underlying momentum in either direction. You really just look at where we are over the last few weeks. We're not in a downtrend. We're not in a near-term uptrend. We have the makings, I think, of a large base, and I think we have the makings of an initial rally, but we don't have a dominant underlying trend at this point. We're now just consolidating. So I don't think there's a whole lot of hurry to do a great deal at the moment. This is just one of those times, I think, to step back and be patient. And I think we're better off waiting for the right setups to present themselves rather than trying to force trades when the market structure just isn't there. And I think this is one of the great advantages of being a private investor or a private trader. We have the advantage of being able to choose to do nothing when the setups just don't provide the right opportunities. The guys working at the hedge funds and the investment banks, more pressure to make stuff happen on a day-to-day or at least a week-to-week basis. Private investor, when it's not happening, sit back, let the market sort itself out, wait for the right setups to emerge. Overall, I think across the stock markets generally, I'm happy to play it defensively and still until a clearer picture emerges. So look, I think we'll leave that there for this week. Thank you for joining me, and I look forward to coming back and looking at that price action again next week. Until then, bye for now.